Hey guys, today is Saturday, March 7th of 2020. Welcome to Backstage with Millionaires. I'm Caleb, your host, and today we're going to be talking about some of the latest news that's been happening in India's startup ecosystem over the course of the last week. And there's a lot to cover, so let's jump right into it. First up in the news, OYO is planning on laying off 5,000 employees globally. Now, this number does include the 1,200 Indian employees that OYO has laid off over the course of the last few months, and it's expected that OYO's workforce will be sitting at around 25,000 employees by the end of this round of layoffs. According to a Bloomberg report, China is going to be hit the hardest by these layoffs. Currently, OYO's employees in China number 6,000, and they're looking to slash that number in half to 3,000. China, of course, has been in the news quite a bit lately due to the coronavirus, which has killed more than 3,000 people in the country and has infected more than 100,000 people globally. While the coronavirus can be blamed for a small percentage of OYO's losses, a majority of these losses are actually attributed to allegations of business malpractice, distrust from hotel partners, as well as boycotting of the company by customers. Also, a little side note here, India is actually expected to lose $348 million as a result of the coronavirus, which has caused a slowdown in the manufacturing sector in China. But coming back to OYO and that Bloomberg report that I mentioned earlier, it's also expected that OYO is going to fire 4,000 discretionary workers around the world. Now, some of these discretionary workers will be rehired once OYO gets back on their feet, but these are huge numbers. 4,000 discretionary workers, 5,000 employees. It looks like in the next couple of months, OYO is planning on firing between 9,000 and 10,000 workers overall. All right, let's move on to some more positive news here. According to the 2020 Bain & Company India Venture Capital Report, 2019 was the best year on record for India's startup ecosystem, as the venture capital industry deployed $10 billion into the ecosystem in 2019. And just to give you guys some context here, that is a 55% increase from 2018. And a lot of people are thanking the Indian government's Startup India campaign for this. This campaign not only created a more conducive environment for startups to conduct their business, but it also made it easier for investors to fund these startups so that they can grow. What's more, an increase in global confidence in India's regulatory policies is evident by India's ease of doing business ranking, which has increased from 130 in 2016 to 63 in 2019. However, in spite of this increase, 80% of all VC investments were restricted to just 4 different sectors: consumer tech, B2B commerce and tech, fintech, and SaaS. So it isn't really surprising that most of 2019's unicorns, that's companies like Big Basket, Druva, and Icertis, came out of these sectors. $10 billion is a lot of money, but believe it or not, out of the 88,000 startups here in India, only 8% are funded. So hopefully with the increase in interest from global investors into India's startup ecosystem and the Indian government's focus on making India an international innovation hub, we'll start to see that number of 8% increasing over the next couple of years. All right, next up in the news, and this is a big one, guys, the Supreme Court has lifted the Reserve Bank of India's ban on cryptocurrency. So finally, after 2 years, crypto is once again legal. So just to give you guys the full story here in case you're out of the loop, back in April of 2018, the Reserve Bank of India had issued a notice which barred banks and other financial institutions from providing any services to individuals and entities dealing in virtual currencies like Bitcoin in India. So in other words, while they didn't explicitly make trading cryptocurrency illegal, this notice had the effect of shutting down the entire crypto space here in India, because people who had been trading in cryptocurrency could not transfer those earnings into real money. They couldn't transfer that money into their real world bank accounts. And so the cryptocurrency would just sit in their crypto wallets. Now though, with the ban being lifted, we can expect a crypto boom here in India, which is really exciting. And there might also be some other sort of indirect or unexpected benefits to this decision to lift the ban. For example, blockchain is what cryptocurrency is built on, and so startups might start to leverage blockchain more in order to create solutions for other sectors or industries. All right, next up in the news, and this is again pertaining to the Reserve Bank of India, Yes Bank has been placed under moratorium until the 3rd of April by the RBI. Obviously, this moratorium is frustrating for Yes Bank, but it's also frustrating for a lot of other different kinds of people. For example, Yes Bank account holders. During this moratorium period, account holders will only be able to withdraw up to 50,000 rupees. Furthermore, there are a lot of startups and apps that have tied up with Yes Bank for facilitating UPI payments. The worst hit among these is PhonePe, which is completely dependent upon Yes Bank for its UPI payments. And I figured this out earlier today when I tried to buy a surgical mask to keep myself safe from the coronavirus. And I didn't have any cash on me. I didn't have any cards on me. I was just trying to use PhonePe like I always do. And for some reason it wasn't working. And so then I went online and found out that this had happened. That being said, PhonePe's founder and CEO has taken to Twitter assuring users that they are on top of this, they are trying to solve the problem as quickly as they possibly can. Apart from PhonePe, there are more than 15 different companies that use Yes Bank as their UPI partner. These companies include Airtel, Cleartrip, Flipkart, Hungerbox, and Udon. Now, it's hard to quantify what the impact of this moratorium is right now, and probably we won't be able to quantify that impact until the 3rd of April or later. However, I will say that the finance minister has come forward and assured the public that everybody's money is safe, it's not going anywhere, and that the government has been in touch with the Reserve Bank of India to keep tabs on the situation. Now, things have not been going well for Yes Bank lately. They've been desperately trying to raise funds for quite a while now so that they can breathe new life into the bank. However, nothing has materialized. And so that's why the RBI has imposed this moratorium. All right, next up in the news, Chinese smartphone company OPPO has entered into India's fintech space with the launch of OPPO Kash, which is an app that would allow their customers to invest in mutual funds. OPPO is claiming that this is the first time that a financial service is being launched by a smartphone company here in India. OPPO Kash is also going to be offering personal loans, business loans, and smartphone screen insurance. In the next 18 months, they're planning on having 6 different offerings on this platform, including payments, lending, savings, insurance, financial education, and a financial well-being score. Now, you probably already know this, but India's fintech space is currently overflowing with startups that are offering very similar services to what OPPO Kash is offering. These are companies like Paytm Money, Zerodha, Grow, and Policy Bazaar, just to name a few. So even though I find this news to be a bit bizarre, I'm really interested to see how OPPO Kash is gonna differentiate themselves from all of this competition. All right, moving on to some funding news now. Online used car selling platform Spinny has raised $43.7 million in a Series B round from investors like Accel, Saif Partners, Alteria Capital, KB Financial Group, General Catalyst Partners, and Nandan Nilekani's Fundamentum Partnership. Spinny will be using these funds to strengthen their technology platform, build business teams, provide better customer experience, and expand to new cities. Founded by Niraj Singh, Mohit Gupta, and Ramanshu Mahar in 2015, Spinny is an online platform that enables their customers to select any car of their choice and then lets them schedule a visit at their nearest Spinny hub, where the customer can inspect and test drive the car before making the final payment. The startup is currently present in 4 different cities and has already sold more than 10,000 cars through its platform. All right, next up in the funding news, fintech startup SMECorner has raised $30 million in a mix of equity and debt funding. Investors who participated in the round include Paragon Partners, Quona Capital, Axion Venture Lab, and SMECorner's founder and CEO, Samir Bhatia. These freshly infused funds are going to help SMECorner to build their proprietary technology so that they can serve their customers better and offer loans to 20,000 new customers. Samir founded SMECorner back in 2014 in order to help SMEs in India grow by offering quick and flexible loans at affordable interest rates. Since receiving their MBFC license in 2018, the startup has disbursed loans worth 550 crores, that's 5.5 billion rupees, to more than 8,000 customers. All right, next up in the funding news, healthcare analytics startup Tricog has raised $10.5 million in a Series B round. Investors who participated in this round include the University of Tokyo Edge Capital, A-Flag Ventures, Team Fund, Dream Incubator, Inventus Capital, and Bloom Ventures. Tricog will be using these funds to strengthen their technology platform in order to speed up diagnosis. They'll also be using the funds to build new products and expand to new markets in Africa and Asia. Founded by Dr. Charit Bokraj, Dr. Zainul Charbiwala, Dr. Udayan Dasgupta, and Abhinav Gujar in 2014, Tricog uses its flagship cloud-based product InstaECG to quickly analyze ECG reports using AI. After this is done, the final cardiologist-certified report is sent to the patient within minutes. This technology could potentially help in diagnosing and managing millions of heart patients around the world. To date, the startup claims to have diagnosed more than 3 million heart patients using its flagship product over the years and has expanded its services to 12 countries, empowering more than 2,600 medical professionals. And the last piece of funding news that I have for you guys today is that dockless scooter sharing startup Bounce has raised $6.5 million in debt funding from Innovent Capital. These latest funds are coming just weeks after the startup raised a massive $105 million Series D round from investors like Accel, B Capital Group, Sequoia Capital, Omidyar Network, Chirate Ventures, and Qualcomm Ventures. Bounce will be using this debt funding to move towards profitability by expanding to multiple cities and also focusing on integrating electric vehicles into their fleet. At present, Bounce is a leader in the scooter rental segment, offering more than 23,000 scooters across Bangalore and Hyderabad. Last year alone, 1.3 million riders clocked in 13 million rides using Bounce vehicles. All right, that is all the startup news that I have for you guys this week. I hope you enjoyed the video. And as always, I would love to hear your thoughts on some of the things that we talked about today. And also, I would love it if you could share this video with anybody that you think would be interested in it. Thank you so much for watching this episode of Backstage with Millionaires, guys, and I will see you in the next one.